Hey, welcome in, everybody. It is Thursday. I think it's Thursday, January the 6th, in the year of our Lord 2022. And here we are doing our little daily thing. Yesterday became a pretty good sized down move in the Nasdaq. Whenever that happens, I want you to scroll out and I want you to kind of look at the long-term picture. So let's do that to start with today. This is the long-term picture of SPY. This is a daily chart. So what we see is that everything looks, very controlled, right? It goes up to the top of the linear regression to the bottom. It goes to the top, it goes to the bottom, it goes to the middle, it goes, it goes there. And you look and you go, well, we're still above the 200-day moving average. Everything's fine. No need to panic here, because a lot of times people start panicking. We're just human. So let's go to the Qs and let's look at the Nasdaq. So Nasdaq had a much more, significant move downward yesterday, but if we look overall, we see that we're still in the upward linear regression channel. So it's helpful to just scroll back a little bit and not get so caught up in the day. A lot of people get caught up in this day and go, oh no, Nasdaq's down, 3% or whatever it was yesterday. And you start flipping and freaking out. And really there's no need to do that. So hopefully that, gives you a little context, just to, just scroll out a little bit. So let's go to here. This is the chart that you guys want. Let me say, I always save it thinking that it'll save it like it'll look right now, but for some reason it doesn't. But let's share this with you so that you guys have this. Share grid and share. All right, so I will post it in our little chat so that y'all have this. Control V. There you go. And if anyone needs help opening that, just let me know. All you got to do is go, I think you go here and you go open shared item. All right, get the little cog and the open shared item. We should be ready to go. All righty then. So what's the market doing? The E-minis are up 0.13. So kind of, just in the opening 15-minute range. We're just below the cash open. We're below the overnight high. We're above VWAP. We're above the hourly mid-band. Oh, I'm sorry, this is not cash open. Here's the cash open. So we're above the cash open, overnight lows here. So just a kind of a tight range with AD, just kind of weak at 117. The NASDAQ up just a little bit more, which we would expect after the knee-jerk reaction yesterday. I mean, y'all, there's no doubt that the Fed is going to be raising rates. There's no doubt that the Fed is going to be doing certain things. And will that hurt the market? Well, potentially, but we must remember that I don't think there's any surprise. There's no surprise for the market that certain things are going to happen. I think everything's priced in, right? So that's my theory, and I don't think that it's something that we really have to worry about. Now, with that said, could the market go down a lot? Of course it can. And that's why we've got our little spreadsheet that tells us, well, if that happens, you can accumulate more shares of the certain assets that we're in. So that's when we do that. So let's look at our volume profile, market profile, see what this looks like today. Wow, look at that. Recent is E-minis. So we see quite clearly, how does this work? I have no idea, y'all. But when we draw these levels, I mean, we should have known that the 4688 area was going to be an area of support. And indeed it is. I mean, you can clearly see, I mean, it was a free fall. Where did the free fall start? I mean, stop. The free fall stopped around a level of support that we drew back on the third day of the month, first trading day of the month. So no surprise there that we have a little bit of support here. Now, yesterday also, hold on a minute, let me mute all. I'm hearing somebody. No. And can y'all still hear me? Y'all still hear me? Just making sure. Okay.
Yes,
So
yes, we can hear you.
hey, Rick, I'm glad Rick's in here. I miss Rick for so long, and Rick just retired, y'all. Rick, what did they give you for your retirement gift? Did they give you anything?
Yeah, they gave me a pat on the back and a handshake. That was about it.
Well, they didn't even take you out to dinner or having a meal, huh?
Well, it's a nonprofit, so we
Well,
have to watch our money.
I understand. Well, Rick, we're just glad to have you here. So Rick can trade all day, and the good thing that we do, we don't trade all day. I mean, I could sit here all day, but I like my sleep, so I normally sleep about 10 o'clock every day, or even later. And you know, we spend an hour or so in the market, and then we're done. We go feed the pigs and the donkeys. So Rick's got other things that Mama wants him to do, so he'll be having a honey-do list that he needs to get done, but he can do his trading in an hour, however long it takes. All right, so what was I saying? Oh, here's what I wanted to say yesterday. So when you saw this, remember the rule is we can enter another tranche of the Sweet Bobby hedge anytime that the market is down 0.4% or greater. Now, where did you enter yours yesterday? Some of you may have entered yours yesterday here. Some of you may have entered here. I entered here. Now, why did I enter here? Because I saw an area of support that we drew down here. So it's kind of cool when you're seeing this little free fall and you're like, well, okay, we're at 0.4. Should I buy now? You ought to kind of look at your big green monster and go, no, wait a minute. Let me use this to kind of help me to know where to get in. So anytime you were getting close to this little area, I think I bought right in here, but you're getting close to an area of support, that would have been the time to enter. Now, that does not mean that the market couldn't have just kept on going and going and going. It could have. But I like the pot odds of placing a trade when we're getting close to some area of support. So as of today, that looks like it was a really, really good idea on my part. Now let's just look at that. And let's look at the trade that I entered yesterday for the Black Swan hedge. So let's go to the E-minis and see where that little puppy is at. I think I went out to 84 days. That should be 83 days today, or 84. Yeah, here it is. See the little red. So let's go see that puppy that I put on yesterday. Here we are. So I sold this thing at $3.40. Okay. So let's go put it in my calculator. Let's see, TTQ Empire. Bring that down. And let's put it in our calculator. All right, so I've built you a little calculator. Oh my gosh, my dyslexia is kicking in. That should not say BSH break even. That should say SBH. Remember Sweet Bobby hedge. Let's just change that already. We don't want to get confused with anybody else's trades that's trying to sue me. So that's the Sweet Bobby hedge. Unbelievable. Can't believe I got to deal with this in my retirement. All right, so I did one tranche and I sold them at 340. Right? So I sold them at 340. I'm going to harvest those when they get down to 20 cents to take risk off. Hopefully they're at 84 days now. That will be hopefully before about 21 days, I'll get to harvest those for 20 cents. So what GTC order should I put in to buy my loans so that I break even? So to do that, click on the data tab, click on what if analysis, and we're going to do goal seek. I'm going to set sell final P&L, which is K2, to a value of 0 by changing which I'm going to change F2. So that'll tell me what price I need to put in my GTC order so that this is a break-even trade. So it looks like I can put in a price of $1.84 and break even. So what if I'm adventurous and say I want to do that for a credit? I could do that GTC order for $1.75. That means I would get a final profit and loss on that trade if I don't need it as a hedge of $22.48. So why don't we do GTC for 175 on that. 175. So we'd want to go down 5 or 50 points below where I sold the shorts. And we'll do a little buy order here. And we'll do 1, 2, 3, 4, 5. And we'll change that price to $1.75. And we'll put it in as a GTC. Now, if you're on Tastyworks, you unfortunately can't do a GTC order. So you have to basically just, monitor it for when you put it on. Now, unfortunately, I was unable to sell 3 puts in the Tastyworks account yesterday. Why? Because of their screwed up margin. So we'll see in a little bit if I'm going to be able to put any trades on today because their margin was screwed up yesterday. So we'll see. So here we put in the GTC order. Now, remember, I don't want you to have too many GTC orders. Why? GTC orders count against your buying power. So if you ever get a margin call on anything, it could be because you've got GTC orders working, and these actually take buying power. And I had to live through it once. I'm going, why am I getting a margin call? Well, it's because I had like 6 or 7 of these GTC orders. So I try not to have any more than 2. I got 1 to harvest, and I got 1 to buy the replacement loan in a Sweet Bobby hedge. Okay, so that's all we're doing. We're just GTC orders and let this little thing run. It's just a program. And when you have what we've got going on, you really don't care about upward or downward moves in the market. You just want moves in the market. And you do want two-way moves so that our algorithm can do what it's designed to do, and that is to accumulate assets as prices decrease and to sell those assets when prices increase. So you don't need one-way action. We want to have two-way action. So we do want to have down markets and we want to have up markets so that our algorithm can fluctuate. And that's why Lucello said, hey, you need to have something volatile so that you get these buy and sell orders in your assets. So that's when you and I came to a decision. Hey, wait a minute. Why don't we run this on some triple leveraged ETFs that are very volatile? When the world says, well, you don't need to do that. Well, we tried it anyway. So we'll see if we're successful or not. Again, it is a risk. It's a big risk that I take. It's a risk that I think is well thought out and calculated, but you have to do your own thing. You do you, baby. You do you. Now, if you were wanting to start and be in the AIM program with something like UPRO or TQQQ, yesterday, or shall I say today, is a great day to start. Why? Because prices were down. So if you're going to bump into it, it's great to do it on a down day. So, but again, you have to make your own decisions and look at your own risk tolerance. So why don't we looked at the E-minis. We understood that this was an area of support. We understood why it was around in this area when I sold those puts yesterday for $3.40 to start a new tranche of the Sweet Bobby hedge. All right, so let's go look at our Nasdaq futures and see what they look like. See kind of the picture they are giving us. Waiting for that. Okay, so here, kind of interesting still, right? It's you see an area of support. Where was the area of support? Very clearly drawn at the 50% line, or 150 as it says. I just refer to all those as 50%. It was at the 50% line here on the NASDAQ. So what happened yesterday in price is price went from a fair value to oversold. When it didn't even take any regard for the oversold location, and it goes into being into overbought, and now it's into the fair value range down below, and it's just vacillating now between this area here. So, it really, yeah, I mean, it's fairly priced. It's into a new zone. Where do we expect it to go? Well, it may try to fill some of these gaps here on volume profile, and it would not surprise us to see some level of coming back up to a value area low or even closer to a point of control. And you see this point of control is lopsided, y'all. There is no volume that is even close to approaching the most significant volume of the last 10 days, which is right on that red line. All right? So this is where volume is really, really comfortable. So will we see some type of movement back into there? Time will tell, right? I always say if the market doesn't go up, Einstein, the market's going to go down. So we have no idea, but we just kind of look and make some type of assumption going forward. Though I do this more for fun than anything, just doing the market assumptions, because it really doesn't matter. We just need movement. We have movement up, movement down. We let the algorithm take care of itself. All right. So with that being said, let us now look at, let us look at our Tastyworks account and see if we've got any signals today. Da, 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 da. Look at this. TMF is apparently down, and our algorithm is saying, hey, Bob, you need to buy 9 shares of TMF. Well, let's look at TMF and see what TMF is doing. TMF is our triple leverage bond fund. So got it over here. Aha. So it's got its own little linear regression, doesn't it? You see it goes up the top, it goes down the bottom, it goes up the top, it goes down the bottom. And right now we're down at the bottom and we're under its 200-day moving average. So interestingly enough, when it gets down here, the algo is saying, hey, Bob, good time to buy you and accumulate some shares of TMF. Okay, so we will do exactly what the algorithm says. Where did we get the algorithm? We got the algorithm from, for those that are new, and I know we got a lot of new people lately, and we're so glad to have y'all, by the way. And I don't want this to be overly confusing for you, but we want you to know where to get the information. I was looking up chocolate chip cookie recipes earlier. Let's get my darn things on. Here we go. So, $1 million into the stock market automatic. And read this book, I highly recommend it. It is the book, the most significant book that I read in the last year. And you can get it for $13 on Kindle. There you go, right here. Or you can buy the paperback, whatever you want to. But it's How to Make $1 Million in the Stock Market Automatically by Robert Lucello. It's a wonderful book. And what I did, if you trust me, I would say never trust me. I'm just some dude, you know, sitting in my underwear in an old dingy t-shirt in my little bedroom at home. So don't trust a thing that I say. But what I attempted to do is to place his algorithm that he ran on a 3x5 index card into Excel, hook Excel up to Thinkorswim so that we could get live data here so that the algorithm would automatically tell us what to do, which seems like a very, very, very cool thing to do if indeed it works. So, you know, do you trust me? I mean, I would say take it apart, understand what the formulas are before you do anything with this, this spreadsheet. So it's basically buyer beware. But as you see, I'm relying on the data. So I'm going to buy me 9 shares of TMF. So let's go get those 9 shares and follow what the old thing is saying. TMF. Dwayne, I'm underwater on both TQQQ and TMF. Does your system call for me to sit tight? Exactly. Yeah, if you're following what I do, yeah, I don't even worry about it. So my account yesterday, in full disclosure, the Thinkorswim count was down like $3,000, right, in a day. And I'm like, okay, it's just down. Now, did I like that? Did I like look at that? But I'm like, no. So I was like, yeah, I'm gonna quit looking at it. You know, it's not gonna bother me. It's not gonna bother me. So if you've got money that you've got to have, you know, in the next year, then this is not the system for you. If you know, if you're looking at a 5 to 10 year time frame, I think we're going to be really, really good. But how do I know, Dwayne? I mean, it's just, you know me. I'm full disclosure. You know, I'm a risk taker, so I'm willing to look at the risk. See here in this account, it says I'm down $4,028 on the year. Okay. Does it bother me? No, not really. because I'm just going to follow the system. I'm going to trust the process that when price goes down, my net lick may go down, but I'm going to be accumulating shares on the way down. So yeah, it seems like it would call for adding shares since they are down. No, right. And so what I would do if I were you is find out where that point is. So we're at 150 here. So you would think, well, it's probably time to buy some shares there. Well, no. So pop in some numbers. What if we go down to 140? Well, that, I mean, you're close, right? So what if we go to 145? Would it have me buying any? Nope. So, you know, where is that point? 143 where we start buying shares? Yeah. So about 143. So test your algo, Dwayne. Go in here and just, you know, now once you do that, you got to go back. So it puts your formula back in, right? You want your formula to be working, but test it out some. You know, what is it saying to do? When will it say? Now, when's this thing going to tell me to sell? Well, it's probably going to be a while. If we went up to 180, would it tell me to sell? Yeah, sell 3 shares, right? So because we've been accumulating them all along the way. So this little thing, to the best of my ability, tells us when to buy or sell. So, you know, what if TQ's dropped to 20? We're going to buy 1,300 shares of TQ. So now, if it went down to 20, you're going to be losing a lot of money too. So you got to just keep that in mind. So I'm at 70%, 20%, and 10% cash. What are you? It depends on your risk tolerance. You got to figure out what is my risk tolerance for this, because this is not a strategy that is not going to have wild swings. It swings, it's strings. It's going to have wild swings in your net lick. And a lot of people cannot stomach that. I can stomach that. That doesn't bother me at all. Being down $300,000 this doesn't bother me at all, because I go, okay, let the algo work, baby. It's going to tell me to buy if something goes down, and it's got to go down enough. TQQs didn't go down enough. So I wish it'd gone down a little further, because I would like to accumulate additional shares of QQQ. Yeah, but Bobby, your net lick's down if that happens, right? Yeah, it is. It certainly is. But I'm fine with that, because I'm an asset accumulator. And that's what wealth building is, right? We accumulate assets. And this has us to take off some shares when things are up, and to accumulate shares when things are down. So yeah, test your algo every now and then. Just pop a price in there to kind of see when will I be accumulating additional shares of TQQ or TML. So I'm really proud that I've got a sitting else only buying 8 shares. Darn it, I better get in here. It was 9 shares. So let's go buy our 8 shares of TML. Yeah, and that's what I'm afraid of. If somebody's doing this, I got a feeling there's a lot of people that won't be able to do this, because you're not going to be able to. You'll start puking positions. So you've got to understand yourself. So just because I'm doing it doesn't mean that you guys should necessarily do it. All right, so we bought 8 shares at $25.12. All right, so let's go put that into our spreadsheet. And I want to answer another question that some people have too. Okay, there it said 9 shares. Should I get another one or not? No, I'm not going to do it. I'm just going to do what I did to start with. So let's go over here. We'll go to the AIM activity, TMS. We bought 8 shares on the year of our Lord 1622. And we did it for 25.12. 25.12. $25.12. And then you got to put in that, is it new counts, rebalancing, or new underlying? And the answer is no. It's just a regular signal. So regular signals get no. And it really is important whether you put no or yes there. It really, really is. So this is not a rebalancing. It's just a signal. So put no there. So we go back over here, and it says buy 4 shares. Now, here's the question people will say, oh, no, Bobby, it must have messed up, right? Because it didn't tell you to accumulate the shares to begin with. No. You take the first signal, you put the order in, and then you don't watch it again. So there are times when it'll come back and say, no, wait a minute, do this. Don't do it the second time. So a lot of people go, oh God, now it says I got to buy 4 shares. So go over here and buy 4 more. No. And another thing you got to do is remember, you don't have to do this daily like I do. I look at it daily. So if it tells me to do something daily, I'll do it, then I'll leave it alone. Doesn't matter what happens for the rest of the day. Just check it once and be done. Roxy, shut up. So now, let's say that you got a 9 to 5. Let's say you got all these activities you got to do, and you can't watch it like a hawk, like I do every day, or come in every day. So you got to make up your mind, maybe I don't need to look at it once a day. I'll look at it on Fridays, or I'll look at it on a Monday, or I'll look at it every 2 weeks, or once a month, or once a quarter. Really doesn't matter. You just want to make sure that you, on some standardized timeline, are looking at your signal. And I would suggest, if you've got a 9 to 5 and you can't look at it all the time, do it monthly. Do it every 2 weeks. Do it weekly. I'm looking at it every day. And I think you're still going to be just fine. You're going to be just fine. Roxy, dang it. All right. So we put that order in. So got that. Everything's fine. So I'm going to close this and save that. And then we'll go to the other account. So the other account says, as we're developing an empire. And when you're building an empire, it is not for the faint of heart, right? You may get wheezy. You may go, oh my gosh, I can't believe I'm down this much. I got it. You're going to see some swings. That's why if I were you, I would not allocate a ton of your portfolio to it. Now, some of you are going to be gunslingers and do that. I understand that. But, devote a certain amount to it. Try it out until you get comfortable with it. Or paper trade. You can certainly paper trade it as well. So let's do, while we're doing that, let's see if we can put on our 111 trade today. Stupid thing probably won't let me again. So we got $11,000 in buying power. Plenty of buying power to do any trade that we should want to be able to do. So let's see if this stupid thing is fixed today or not, because I never called Tasty Works yesterday. So trade, we're going to go table mode. We're going to go do our 111 trade, closest to 60 days without going over. We're going to loan put vertical. How much buying power does it take? Praise the Lord, $13. Remember yesterday that was $23,000. Looks like they fixed it. So that's $13 in buying power for a 50-point wide put debit spread. Currently that spread is going at $15.25. So what do? We're going to move that down until it gets to about $10. That's what we're comfortable spending on this trade. So we move it down. Oh, I don't see my orders already here. So I don't like trade show position. So there we go. And I don't want to sell an option where I've already bought an option, right? And I don't want to buy an option where I've sold an option. So we're moving this down, moving it down, then it gets stuck. Dang it. Moving it down, 50-point wide, then it gets stuck again. Dang it. So now we're at $11. So we're going to move that down to about $10. There's $10. We're going to go down one more at $9.75 because we normally have to bump that up. I say we normally have to bump that up to get it filled. So let's get that one filled for $10. Takes $15 in buying power. Yeah, that's good. That's more like it. Ta-da! Ta-da! All right, so we're filled. So that cost us $10. So now we're going to double that and sell something so we'll get in $20. How cool is that? And you see, because of that market drop yesterday, see where these other ones were that we sold. So now we're getting to go down a little bit farther. So we'll get down 41.10. So it's going for 2025. Let's sell that one. We're in. And then we like to go and look at our fortress, see what our little fortress looks like. And the great thing yesterday, someone asked in Discord, did anybody have a single trade that was up for the day? I did. My overall 111 trades were up for the day. Now everything else was down. I lost in everything else yesterday, but my 111 trades were down and looking really good. So here's what the fortress looks like. And if you're putting on your first 111, it's not going to look like this. And yeah, are you going to have risk? Yeah, but you got to look at the overall overall portfolio. So you see what I built here. Tom King referred to his as an elephant. I refer to mine as a whale. You see the whale here? It goes like this. See my little whale? He's got his little tail over here. And he's got this little whatever that thing, blowhole right there where the water comes out. And a little eye, a little now. So you see a nice little whale, right? So if the market goes up, I don't care because I make money. But if the market goes down, look at this. Isn't that sweet? Just a great little illustration of the hedge we got here. So that's upwards of, if we P&L at expiration, it looks like it's $8,380 if you expire in there, all the way down to $4,250. So I'm using this to offset the losses that I would have in something like TQQ. So my losses in TQQ hopefully would be somewhat compensated by this. And then on top of that, if TQQ goes down along with the overall market, what am I doing with my shares of TQQ? I'm accumulating shares. I'm buying those shares. So it's a great little program that works, in conjunction with each other. Now, here's the deal. What if, we've talked about this before, what if the market were to go all the way down here to 4,060? It's a long way down, y'all, when we're at 4701 right now. Well, that's when we have the Black Swan hedge. Black Swan hedge theoretically would pick up on the increased volatility and offset losses that we would have on these particular trades. Okay. So too many of you are, in my opinion, are doing what the amateur move is. You're looking at every trade. And you're going, oh no, this one trade is down. Okay, that's not how the professionals do. Are we professionals? Probably not. We're just, I'm just so old, fat slob, black glass wearing, ham, spam hat wearing, nine-toed, lazy old joker sitting here in Georgia. That's who I am. But you're looking at the trades. I want you to look at the forest. The forest first. How's my forest doing? As you can see here, this forest looks good. Forest looks good. Don't worry about the individual trades. How does it all go together? So I've got 183 positive deltas. Okay. I got vega of a negative 112. That's fine. And I got positive theta there. Nothing to see here. Everything looks fine. Everything looks good. All right, so let's go to the other account. Let's put it in our 111 trade. And the great thing is, I don't mind showing y'all that I lost $3,000 yesterday. I don't care. Do not care. All right, so what are we doing? But can you stomach? You got to say, can I stomach the swings? Let's go over here. I said, let's go over here and put in the micros on it. Micro. Anteater. It could be an Anteater. All right. Let's put our same trade in over on here. Waiting for data. Okay, here we go. So we got our macros. Where do we go? 53 days. And we're going to do the same stripes over there. Take off my glasses so I can see, which was 45.50, 4,500, 45.50, 45.50, 45. All right. So here we go. 45.50, 45. And I will show y'all how the 111 did yesterday. Let's just see, boy, we had a big down day yesterday. I bet you got crushed on those. No. Overall, those trades were profitable for the day. So 45.50, 4,500. Hold your control key down. Roxy, will you hush? What are you growling at? That one's at $10. And then we're going to go down and sell something for around 20. Something for around 20. 41.10 for 14. And then same thing over here. You got to bump that to, I say you got to bump that down about a quarter, 1075 to get that fill. So let's do that. See if we get fill. Takes us $424 of buying power. I said, we're going to see if that gets field. 10.50. Tells you want about a $10 credit. 10.50. Cost me $2,000. Found it free on Facebook. They knew the little thing's belly was just filled with glass and plastic, and it was a sick little puppy. Mr. Gates, we got the dog open. Do you want me to kill it or let it die? Well, let's see if you can save it. No, there's no guarantee. Yeah, I know. That's your stupid little thing. I love it though. It just licks all the time. I'm like, will you quit licking me? Sometimes that gets just so annoying. Oh, it's just a licker. Move to group. So let's put this one. I think we were up to 55 yesterday. So let's go large and in charge. So we'll put that in 111, what, 56 today? I've had 56 of these trades. How many have been losers? 0. So we're probably getting due for a loser on one of these. We'll see. 111, 56. Now, all right, so let's kind of, oh crap, it's already in use, huh? All right, well, let's call this one the 57th, dang it. Don't tell me I've already got 57. So we have 57 of these, not a one of them's been a loser yet. So let's just look at them. How did they fare yesterday? How did they do? Let's see if we're still up or down on, because the market's not that up today. Let's see how they're looking overall. Now remember, most times I don't look at the trees. Most times I'm not looking at the trees. I'm looking at the forest. The forest is much more important to me than the trees. So we go here. Let's see, 111.57. Dang it, we're down $1.25. Okay, we can live with that. What about our 35th one that we did? Wang, it's up $59, even after that humongous drop yesterday. Isn't that cool? Okay, well, Bob, let's see about the other ones. Let's see, micro. We don't want to look at the BSHs now. Look at this, up $59, up 116%. You see why you want an arsenal of these little things on? Let's see what else we got. 111.41, up $66. Great. 42nd, up $55. That's a BSH. Let's see. 111.43, $57. 44th, $57. $35. Isn't that great how resilient those trades are onto the downside? Look at there. $26. That's one we put on maybe what, last week? 51st, $22. I mean, these were just little gold mine trades. Look at that, 875, 1375. Uh-oh, we're down $1.25. How will we live? Down $11.25. Oh, behave. Up $59. 111.32, up $66. $61. You know, I'm just kind of checking the trees now. Trees are really healthy, y'all. Up $47, up $66. BSH 111.30, $75. So y'all kind of getting the picture, right? That these trades are really, really good. Maybe it'd be helpful if we look at the overall forest so you can just see, because the only thing I got in the micros, well, I do have a couple of micro black swan hedges. So let's look at the forest overall. All right, so the forest overall, 205 deltas. I'm now positive theta. And my Vega, a little, a little bigger than I'd like it. It's at a negative 173. But let's just look at everything now. So 217 is my TQ's delta. I told you want your overall delta to be approaching your TQQ delta, or why hold TQQ, right? Why do that if you're not going to get the power of that thing going up? And then it should be reduced a little bit by your hedges. So let's just look at the macros. Look at this. On the open, I'm up $1,119 on those, and I'm up $135 on the day. What a great little 111 trade that is. On ES, I'm down $37.95. TQs, I'm up $231 on the day. I'm up $3,000 here. Even though we lost $3,000 yesterday on the open, we're still up $3,000 on that. So, you just kind of have to figure out if this fits you or not. It's not for everybody. and I would think it's not for a lot of people. And we're doing what they say can't be done. We've got a long way to go. The experts say we can't do what we're saying. So we're just saying, well, we think we can. Yeah, maybe we're wrong. So I'm not sure how y'all feel. Now, after a down day yesterday, probably y'all are like, oh my gosh, this sucks. This is horrible. Well, maybe. But it doesn't bother me because I've got all these great little triggers happening. I love it. My TMF is down 62.82. That's horrible, Bob. Is it though? Because now I've got a dashboard that's telling me to buy 8 shares. Oh, Bobby, old pal. What's TMF going for? Because I don't have live quotes. I get delayed quotes in Thinkorswim. So it's going for 25.18 is the ask. So darn it, I should have done it a while ago. It's going up 6 cents. So I got to buy 8 of these at 25.17. So let's do that. Let's do 8, 25.17. Trade TMM. And we'll hit on the ask 25.17. We're going to do, oh my gosh, behave. About 8 shares. Make sure I don't put in 800 there. And at 25, it's going for 16 now. I'm going to try 25.50. Come on, Bobby, old pal. Uh-huh. Up it up a penny. 25.16. Come on, Bob. Oh, you got filled. You little sweet baby, you. Yeah, he's good. Monitor field orders, just making sure. 25.15. We did 8 of those. Here we go. 25. What did I say? 15. TML. 8 shares. 1,622 at 25.15. Good note there. All right, so you go back to your dashboard. Oh, buy 3 shares. Ignore this. Don't even worry about it. Okay, just trust me on that. So now I can save this. Oh, we did look at our Skew Driver today, didn't we? See what our Skew Drivers do. Come here, Skew Driver. Good point, Enrico. No, we didn't. I was mixing it up a little bit. Y'all see how I mix it up? I'm trying to get y'all, keep y'all on your toes. All right, so where do we want to go? Oh my gosh, do we really have expirations and all that? No, here we go. So 2-4. 2-4 is 29 days. 5-2, 58. Unbelievable. 58. Skew Driver. 1,622. 58. All right, so Skew Driver went up a little bit. Everybody see it? This is generally where normal is. We've been in a weird little condition where this is the new normal. And when it spikes, and you would think after yesterday, man, we were probably going to get one of those humongous spikes, but we didn't. Had we, we'd be really, really bullish, right? Because this is bullish when it's out here. So what does this mean? Well, keep in mind, this thing works best at extremes when it's up here or down, way down here. We hadn't seen it down here yet. But this is saying, now it could go back to 98 first, but this is basically saying we expect at all times reversion to the mean. So for skew to go down, that would mean that the market SPX would go upward. So that, what would we say? We're probably neutral to bullish on the market based on the skew. I love the skew. I hope y'all do too. And fortunately, the guy that came up with Skew Driver has not sued me yet. I expect him to do that any day. And that's the bad thing, y'all. You know, with Ron Bertino and the little deal that he and I are having together now, you know, here's the deal. There are those of you who have signed up for his course because of me crediting him with certain things. So there have been those of you that have undoubtedly signed up with Theo Trade because I've told you of some of the great things that I have from Theo Trade. There are undoubtedly some of you who have signed up with JL Lord, aka Scott Rubel, who have, you know, signed up with his service. By the way, I think he's given a free 30 days. And I understand that those people make money by charging you for their services. I got that. It's just that I don't think that I'm not using their copyrighted materials. I'm not using any material from anybody else. I'm just using things that I have learned and from people that have shared with me. So do I know that I'm doing exactly what Ron Bertino's doing now? I have no idea what he's doing. Can you sign up for his courses? Absolutely. And I think you'd probably get some great information for that. Did I ever sign up for one of his courses? No. I know someone that did and shared with me how to do the trades. I mean, they taught me how to do it. So, I'm not trying to infringe or to cut out their livelihood. I want them to be able to make a living too. And that's why I would say, if you want to go with Strategy Trade and sign up, it's $299 a month. He will paper trade an account, but the guy's a genius. I mean, he's smart as all get out. Would you get something beneficial from him? Yeah, he's got 30-day free trial. I'd send you a link to his account. I got no problem with you getting education wherever you get education. I want y'all to be educated. I think we get into this thing like, oh, you've got to do it this way, or, no. I mean, y'all, basically what there is this. There's shares of stocks and ETFs, and then there are calls and puts around those instruments. Everything that we trade is some combination of any of those. You're either doing shares and or options, and they're puts and calls. And I hate to tell you, but a put back ratio spread is not something new, and it's not something that Ron created. It's just not. Now, he may have tested it in a certain way and in a certain ratio and all of that. That's fine. But that is not something that we're going to copyright and say, you can't trade. So we're doing an overall, what I call the sweet butt strategy, the Sweet Bobby Ultimate Trading Strategy. And it's made up of a lot of components. And I would not trade any of those components by themselves. Well, I probably would. I'd probably do the Sweet Bobby hedge by itself. I wouldn't do the 111 by itself. I might, if I had some, I don't know. I still want the hedge to the downside with the Sweet Bobby hedge or something of that nature. But I want y'all to succeed. God is my witness. I want all y'all to be successful. Whether it's Rick doing the Rick trade. I mean, we named a trade after Rick, for goodness sake. He's doing the Rick trade. You know what he did? The man looked at some of the research that I shared on our Discord channel, and he said, this makes sense to me. And dude started trading it, and he's been wildly successful with it. So Rick doesn't necessarily need AIM or 111s or any of this other stuff, but he may do it. You got to make it your own. So Rick needs to come up with the Sweet Rick Ultimate Trading Strategy. So the Sweet Rick Ultimate Trading Strategy might be the Rick trade plus a Sweet Bobby hedge. He may not even need it. So you got to figure out, that's what I try to do. Y'all know, if I read a book, it's not like I go, oh gosh, let me sit on this. I can't share this with anyone because what if it gets out? I mean, what kind of life is that? And I know there's hedge funds out there that have proprietary. If you ever hear anyone say proprietary, run. We have a proprietary strategy. No, you don't. You're either in stocks, ETFs, or options. Don't give me this crap. You got a proprietary strategy. Moron. There's no proprietary strategy, but we do something that no one else does. Oh, bull crap. Those are the people that think their butts don't stink. Right? It's like I tell my kids, brush your teeth, because if you don't brush your teeth, your mouth will smell like your butt. That's what I always tell them. And I always get a funny look from them. I'm like, get in there and brush your teeth. I don't brush my teeth. If you don't brush your teeth, you go to school, your mouth will smell like your butt, and nobody will be your friend. So all this proprietary garbage and all this that we're trying to, everybody's trying to make a living. Let me tell you something. If it was so good, then you wouldn't have to sell your course. You'd just be trading it. Huh. How about that? Jack? If it was so stinking good, you know, why would you be even sharing people paying you $6,000 for a course? If it was so stinking good, just be trading it and you make your own money. I like education. I'm a professor at the University of Alabama. Y'all know that. I love teaching. I love to teach and to instruct. And what I get out of this is coming to y'all daily and being able to stay accountable. Because I want you to see when I'm down $10,000 in the account that it doesn't bother me. I want y'all to see that. I want you to see, hey, I'm just following the plan. We got a plan. We're going to go with the plan. It's all I can do is go with the plan. So I want y'all to be wildly, wildly successful. I want us to honestly, if Beth will ever let me out of the house, to meet up in Atlanta and just trade for 2 days, you know, and just go to the Braves game. That's what my really hope is. If we can get this COVID stuff all out of the way, wouldn't it be great? We all meet in Atlanta. We're up there. We go to the Battery. We look at the Braves game. You know, we go bowling at night. You know, a couple things, whatever. We just sit around the hotel and just chat and, you know, have an umbrella drink. I'll drink Diet Coke, and we'll just chew the fat. Wouldn't that be fun? And not to go there to say, oh, I'm going to charge everyone $10,000 to go there. No, who needs that? Pay for your hotel room and pay for your own Braves ticket. How about that? Pay for your own dinner at night. How about that? So to charge you $5,000 to come and do something, well, we can all do for free. So that's what we're looking to do. I think that would be so much fun. Y'all imagine? I'm looking forward to that day. So unfortunately, we're in an environment where traders are just, how many times we talk about a-holes? So we finally got a group here where we don't have any a-holes. And if we have a-holes, we'll kick them out. But everybody's been so gracious and so, you know, now if you start getting down $4,000 on the day, you may say, I hate you, Bobby Gaines, or whatever, and I'm gonna, you know, whatever. But I'm trying to give you the good, the bad, and the ugly. It's a strategy. It's an overall strategy. All right, any questions at all? Yeah, Rod, wouldn't that be fun? We'll go to the Georgia Renaissance Hotel right across the street from the Braves, and we'll go there and then go to the Battery, and we'll go, you know, it'd be great. Maybe go bowling. It'd be fun. You know, I'd have to, if we're going to take my van, I'd have to clean it out because it's got chicken nuggets in it. And y'all would go, oh my God, he drives around in this with all this garbage in there. Let me tell you something. You take your kids to the McDonald's drive-thru, see what you got in your car. Yeah, nobody's too good. I'm not driving some, you know, Ferrari or any crap like that. I got a 2011 Nissan Rogue, and I got a 2017 Prism van. Yeah, life is great, but I'm happy as a Lord. I am happy as a Lord. If this count here goes to 0, I don't care. Well, I do care, but it's not going to change my life or my lifestyle. So you do you, I'll do me, but I'm glad to have y'all here, and I'll see y'all tomorrow.